Good weekend, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Sunday, the 20th of March, 2022. I've been waiting a few days each week, and I normally try to do these on Saturday, but with what's going on in Ukraine and other parts of the world, I wanted to wait. The events that now happen is there's more missiles hitting Ukraine. The encirclement is going on there. Big problems. Houthis again struck Saudi Arabia, hit 2 refinery areas from what I'm reading there. It sounds as though Germany is reaching some deals with some OPEC members to be able to get natural gas and other energy and starting to back away from Russian needs. Australia over the weekend, now they're not going to send alumina exports, which Russia gets 20% of that from Australia, and that will hurt their aluminum business, and they're a big exporter of that. So the news keeps going. On Friday, Russian central bank kept interest rates unchanged at 20%. If the war keeps dragging on, the next meeting there is April 29th. Wouldn't surprise me if you go up to 25 or 30% if it keeps dragging on, because it's just going to keep draining the economy. The ruble, especially if it continues on this current descent down, creates tremendous inflation. That'll get Putin just where the world wants him to be. The idea there is to hurt him, and hurt him big economically. But when we take a look at the monthly area chart of closes on the S&P, for the month, it's hard to believe, here you are at the 20th, you're up almost a percentage point. It certainly doesn't feel like it, right? For the week, a huge gain we saw in a weekly charts, up 5% on the S&P. So this is the first serious bounce off of a pattern of lows. When I take a look at a weekly bar chart, so as you see the market coming down, you have to ask yourself what's going on. And what the market did is, with this outside week up, it puts into play the idea that the market can go for some moving averages that are possibly above the market. I'm going to guess it's going to culminate with a challenge of the 45.19 area. I do not expect that the market's going up for new highs. I will probably be the most surprised chartist on the planet Earth if that happens under the current environment. So what I'm seeing is a bounce in a market that finally is saying, okay, let's correct this, probably get up to that 18-week average and stall out in that general vicinity. Bollinger Bands, it was just a question in my mind when the market bounced away from it, and that's what you've got right now. It doesn't even have to hit the 18-week average, but the market is making a statement. There's one other key part. If you go this coming week or the week after, and you take out this week's lows, my rule then is that the market will make a run, if that's taken out, to the closest of a lower Bollinger Band. Can't be that, we're already there. So it's got to be the 100-day average of closes, and that would be 39.40 area, wherever it's at during the week when that happens, if it happens. Momentum turning up. So we finally have found a trading bottom. I said that earlier in the week if you were watching my daily reports. Now the week is adjusting with that the same way. In the industrial, same thing. Higher lows, higher highs, so I'm looking for the resistance here. And I'll repeat myself. I don't think you're going for new highs on the move under this environment. The NASDAQ, not the same. You have the lower and low. Okay. And what do you have here? If you come with me right through this, here's a low of 13,025.75. You then go down this week. You didn't get as low. You got to 12,944. It is lower than that low. So because it's an outside week up, I put the arrow there. I've got lower highs, and I'm looking to see if the market can get a bounce out of that. In the Russell, it's still the pattern we've had in other markets, which is higher lows, higher highs. Market is giving a bounce. I think it's going to hit the 18-day average. Would make sense. Did we ever embed in this market? That's a good thing to look at. So you had both numbers under 20 there, not the day before. Next week, both under 20, and the week after. If you lose that reading with any readings over 21, and you get it here, unless you go down and make a new low on the move, the odds strongly favor you're going to make a run to the 18-day average of closes. I think that's what you're going to get right here. In the 30-year bond, Market's right back on its butt. All it did is give you one of these contra-trend rallies on the daily charts and the weekly, getting up to key resistance. That's what I think the stocks are going to do, the stock indices, and failing at that number. Now, you don't have a clean trend. You have a higher high and low, and you have a momentum down. It's hard to do anything with that. Same thing happened in the 10-year notes, and I was telling my traders and my subscribers, I thought we'd fail against that, and we most certainly did. In the dollar index, we are looking at a market that's got higher lows, higher highs, but that's an awful lot to get through. Markets don't stay over the upper Bollinger Band, which is this black dashed line, more than 5% of the time. You have a distribution pattern here that could carry the market a little bit lower. In the euro, it was the flip-flop. You were under for 2 weeks, the lower band. Now you're getting your bounce. I'm going to look for a failure at the 112.71 level. Canadian dollar. You have a lower and low, higher high pattern on the weekly chart. Momentum up and bias up. What do I think's developed? I think you're going to trade between the lower Bollinger Band and maybe get up to the upper one and falter right there. Japanese yen, I am still quite bearish. I think that you don't want to sell under a Bollinger Band. That's what I teach. But on good hard rallies, I think that's the place you want to get short. Bitcoin, this has been a contra-trend rally. Now, what do I mean by that? When a market is under a key moving average, we'll call it the 18-week in this case because it's a weekly chart, that means the bias is down. If you get a rally, not uncommon to get a rally back to the 18-week average, and the market stalls there for a bit as it gets its footing and has to decide what next. Then we get to Brent versus WTI crude. Now, making matters even worse than we've had in crude, tonight, in, I think it's Redding, California, Chevron workers are about to go out on strike if they don't strike a deal before midnight. 245,000 barrels a day come out of that Chevron plant. They told workers yesterday to go in, take all your gear out because this could be prolonged. Why is it occurring? Folks, with oil prices this high, what's going on is everybody's saying, oh, the refiners and everybody else is making money, they're gouging, I want my share of it. That's probably what's going on. They don't take into account world forces, of course, but the profits have been large. Can they give that money? Yeah. Is it going to be inflationary? You know it will. But that's something you have to consider, and it's certainly not bearish for oil prices. But oil, like the other markets, you don't buy over the upper Bollinger Band. I don't know how to teach that. If you go to my charting course, I hammer it into your head. Go there on www.iraepstein.com. It's all waiting for you, and it teaches you these basics, if you will. It's under the word education at www.iraepstein.com. Now, look at how momentum's turned down. That often leads to a break to the 18-week average of closes. With all this bullish news over the weekend, we'll see, because you're going to lose some oil in America, 245,000 barrels unless a deal is struck. I still have not gotten a full read on what's happened with the Saudis, how serious the damage was. Generally, they're able to make up that difference with what they've got on the ground in storage and then get the repairs done. So we have to wait and see how that's all going to play out. As for us, well, you lost your embedded reading. You often get down there. The only thing that negates that is making a new high on the move. And while we have some bullish news, staying over an upper Bollinger Band, to me, sucker play. You want to be very careful. Last, gasoline, still very strong. We're seeing in Chicago a number of humanitarians. Is that a good word? They had people at 10 service stations fill up for free. Can you imagine the lines we had? I mean, it's huge. Now, they did limit the amounts, $200,000 here, $300,000 there, but it's pretty important. And you can see what people want. I'm seeing prices on the West Coast for gasoline diesel over $10. I was watching Maria Bartoloma this morning on Fox talk about that. Unbelievable, $10. How do you do anything with it? I mean, can you imagine shipping costs, what they're going to do? So you put this together, this type of news, you try to come up with game plans, and I help you in the morning. First thing in the morning, 5:30, I start recording. Now, I'll cover daily and weekly charts, primarily Monday through Friday, the daily charts. I'm going to give you short-term trades, swing trades. I'm going to give you the morning news, what's impacting the markets for that day, key government reports that are coming out. Like tomorrow, we only have the Chicago Fed Regional Survey Index. I cover 40 different markets for you, and I make it easy. This is what it looks like, and there's a scroll bar on this. Just grab the scroll bar. Let's assume you want to know what the grain markets look like. Scroll right to that. Let's assume energies. Scroll right to that. Anywhere you want. Because each video is about 20 minutes long. These are not quick videos. Hey, you're here and out that way. You also get to see my special videos, and I'll go back to recording those, and I'll probably this week have a live webinar as well. So look for the date. It's typically on Thursday. I've just got to do one thing tomorrow to make sure that I'm free on Thursday, and barring that, you're all invited into it. So how do you get all this? Just go to our website under www.iraepstein.com, under the word research. Everything's there for you. I'm Ira. You have a good day.